All right. This is really cool, actually. Oh, this is funny.
Complete technology.
Oh.
For it. There, we got everybody. All right. So, okay, Emma, please stay here. Okay, Clarence, thank you very much for chaperoning. All right, so we're gonna. Emma, you can. Cool. And then no worries. This is all new experience. So my name is Jay Yang. I'm a CEO of Tacen Incorporated. We're making a hybrid exchange. So you can check it out at Tacen.com. But you're not here to listen to me. You're here to listen to the panelists, who are much more impressive than I can ever be. So we're gonna go from left to right. Let's start with Emma. Please introduce us.
Sure. So my name's Emma Jane, and I'm the founder and CEO of DigitalX. DigitalX is a digital fashion project, and we're building on top of Ethereum. We use digital NFTs to distribute our digital fashion assets, and we have a marketplace for our NFTs and Ethereum network. So we only started about 2 months ago, but I guess we're able to be part of like a kind of bull market for NFTs, which was really exciting, and have gone from there. But our bigger vision is a lot around how do you provide application utility for 3D assets. So we're building out as well new file format technology that will enable these digital fashion NFTs and then other 3D assets to be taken directly into game engines once they're bought on our platform.
I always have to unmute myself. That's fantastic. That's so exciting. I need to talk to you after the conference about this. So let's go for Paul, who's the CEO of Guarda Wallet.
Yeah, hey everyone. Guarda Wallet is a multi-currency light wallet, which means we don't keep the keys. So the customers have the keys, and we are omni-channel, so you can use it on any platform you wish. So basically that's it about what we do. Yeah.
Perfect. We'll also dig into individual like accomplishments and stuff like that, because you guys all have very interesting story. But let's go to Steven.
Hi everyone, my name is Steven. I'm the founder of.
You broke up a little bit.
You guys hear me okay?
Yes, we can hear you now. Go ahead, Steve. Okay, or not. I'll introduce. Steven is a CEO of Harmony. He has been obsessed with protocols and compiling since high school. He reverse engineered ICQ and X11 protocol, which is way more work than I could ever hope to achieve. So it's a very impressive work. And Camel, which is a functional programming language. So he's just flying here. He's got more than 15 years experience. Steven, I'm sorry for introducing you to the team, to the folks here, but you kind of broke up, so I just wanted to fill in for you.
Thanks.
I hope you're okay with that. All right.
Mm-hmm.
All right.
All right.
Go ahead.
Do you want me to go?
Yes,
after?
please. Absolutely, Leo. Yeah.
All right. Hi, everyone. My name's Leo. I'm the founder and CEO of Vulcan. We're a Chainlink node operator, and we operate a bunch of feeds we contribute data to the Chainlink reference data feeds. And we've also been running multiple pilot programs on sidechains. So trying to expedite the launch of Chainlink oracles on multiple sidechains, such as Elastos, Scale, and others basically. And probably Ethereum 2.0 as well in the future once we have sidechains.
Fantastic.
I guess that's it for now.
Yeah, there'll be exciting questions. There'll be a lot of interesting questions that we have for you. And then last but not certainly least, Alec.
Hi, everyone. I'm Alex Larson. I'm an investor at Blockchain Capital. We were founded in 2013, really as the first venture firm that was focusing on the blockchain space broadly beyond Bitcoin. And we've backed about 100 blockchain companies and protocols ranging from networks like Bitcoin and Ethereum directly to infrastructure built around those networks, the Coinbases, Krakens, Anchorages of the world. And really over the last 4 or 5 years in particular, we've been moving up the stack to applications that we're really excited about, and probably the biggest category for us and certainly for me is DeFi. We were an early investor in 0x, UMA, Aave, Nexus Mutual, Wi-Fi, 1inch, and a handful of others. And really our approach is to roll up our sleeves and get in the trenches with our founders, whether it's leveraging our network to find them their first clients if we can, being the first kind of power users of the protocols, participating in governance, helping them navigate the regulatory environment, or even building liquidation bots and market making on DeFi networks. We can kind of help on all fronts of building in DeFi, and our whole team lives and breathes this stuff.
That's awesome. I mean, it's always good when the investor knows the space very well. I remember pitching to a lot of traditional investors, and it's a lot of on-ramping. It's very difficult, but it's always let's get started. Let's jump right into the DeFi ecosystem as is. Like, how did we get here? I was just looking at the gas price the other day, and it was like 200, 400, or something ridiculously high, which is enormously high. And so as a part to kind of mitigate the price impact and scale out, ETH2, which is a really impressive and complex system, has had a lot of stakeholders buying into the premise of it, right? Like there was a staking into ETH2 for beacon chain and things of that nature, so that you're basically bootstrapping the network. What does it mean for a DeFi project? Like, what is the impact of ETH2? And just let's start with Stephen, because I feel bad. I'm so sorry it broke up. What do you think is like a impact of DeFi? What impact of ETH2 on DeFi?
Thank you. Do you hear me okay now? Yep. Sorry about that. It must be my mic. I was just testing a fancy podcasting mic. I'm very glad to be joining this panel, because there are many of you that I want to talk to about the whole what DeFi and the scalability.
That's the work hazard we have. So while he's having trouble, okay, now we're back.
Is my audio still breaking up? Let me turn off my video to see. Is it much better now?
I think so. Yeah. Please continue. You broke off.
Yeah, I apologize. Do I sound better now? Oh my goodness.
Okay. So if it seems
function of ETH 2.0 for the
no, it's like a video streaming is also ETH 2.0, ETH 1.0, right? So let's start with Leo, and then just kind of whoever wants to talk, please feel free to chime in.
Yeah, maybe I'll just start by giving a quick broad overview of like the roadmap of ETH 2.0, because I've talked with people who are less familiar with it, and I think there are a couple of misconceptions. So, for example, the effect of ETH 2.0 today on DeFi is probably quite minimal compared to the scalability improvements we'll have in the future. What we have today is just a test of the consensus staking model, where we have the beacon chain and people staking and validating blocks, but effectively there are no smart contracts running on the beacon chain, just so that everyone is clear. Apart from the staking, but you can't deploy Solidity DeFi project yet. Then in the roadmap, there's going to be side chains, which are going to be EVM compatible side chains that use the staking as a security instead of proof of work. And then finally, currently it's planned for 2022. We're going to have the docking, which is when the ETH 1.0 chain will also become a side chain, and that's a bit more difficult because you have the legacy of all of the existing smart contracts that are running, so you want to be careful that you don't break things. So in 2021, we'll probably be able to deploy smart contracts on Ethereum native sidechain, not some other company running a sidechain. and then in 2022, hopefully the full ETH 1.0. So your existing Uniswap contract, for example, will have cheaper gas fees, but that's probably for 2022. But until then, we also have other solutions like optimistic rollups and other things that are usable today. But that's a quick overview.
That's a really good overview. Thank you. So please feel free to chime in. This is your show.
To chime in here. So, I mean, I think that the consensus opinion seems to be like ETH2 is an entirely new system. So the consensus mechanism, the state model are both changing, and that changes a lot of the assumptions that you have to make when you're writing smart contracts. In addition, a lot of the tools and the contracts that have been written for ETH1 will, in all likelihood, I think, need to be completely redesigned and rewritten for ETH2. So a lot of the kind of magic that we have in ETH1 right now is this idea of composability, where it essentially means transacting across multiple smart contracts at the same time. And this is really powerful because you could manage risk in new ways, and you can settle complex transactions atomically or dependent on the execution of sub-transactions. And none of this was possible before, which has led to things like flash loans and these really kind of complex transactions that get put together across multiple protocols in a pretty elegant way. But it also means that composability essentially expands the size of transactions. And so scalability, on the other hand, is all about compressing the size of transactions relative to the capacity of the blockchain. So you can kind of think of composability and scalability as being opposed concepts somewhat. And so in a sharded context, cross-shard communication is asynchronous, meaning an application on shard 1 can't synchronously call an application on shard 2. And so that means that composability probably breaks to the extent that applications fragment across shards. And so on a practical level, this means that really in the short term, I think one shard or one layer 2 solution, like an optimistic rollup, will probably have some strong network effects. But if you push all the activity to the same layer 2, you eventually will run into a similar problem down the line. And so probably longer term, if I had to guess, it'll mean that applications will have to, couple with other applications that are, the most synergistic to what they're trying to do. And so we've kind of seen some maybe informal partnerships form on layer 1. If you've been following the kind of Yearn partnerships, we've seen Yearn announce, some sort of a partnership with Sushi and Cream, and they're going to start working together in tandem much more closely. And so I would expect that those systems that benefit most closely from one another would probably migrate together to a layer 2 or would target the same shard longer term. And so that'll serve as kind of maybe a best solution to composability in a sharded or layer 2 environment.
Right. What do you think, Emma, about this like sharding, and whether that helps NFT side of things, or whether it has a minimal impact on the NFT market?
Sure. I think it's a really interesting question because the same kind of concept of composability that we see in DeFi, I definitely think that there's huge applications and use cases within NFTs. Even to just give an example of what we're doing. So we have this kind of concept where we're taking the variant of the ERC 998 standard. So that's really where you have this idea of like a master NFT, and it can actually kind of own child NFTs on chain. So we took this standard and we're using it where our ERC 721 NFTs on chain, they can own a balance of ERC 1155 NFTs. And this was very much incorporating into this idea and concept that we have is how do you create a transparent digital supply chain for digital fashion? So how can you actually compose a master digital fashion garment on chain and have raw materials, patterns, and textures that any independent artist can contribute and create and like mint these NFTs, these 1155s, and open source them onto the Ethereum network through our contracts. And then other designers can take these and incorporate them into their master garments, but have that tracking on chain where now the 721 master garment can own these on-chain 1155. So this was a really interesting concept that we brought forth, and it was called fractional garment ownership. But the biggest challenge was the actual transfer because the metadata is a lot bigger. The file size itself that we're storing in IPFS, it's not huge, but it's definitely in the upper range. that at these times when these transaction fees and the network congestion is big, it's really kind of a big trouble, and I would say stops a lot of the innovation side, which I very think the NFT market is kind of opening, I guess, new ways of how do you bring creativity into the Ethereum network, and what does that look like, and how do you kind of represent new business use cases that outside of finance, or not so much just outside of finance, but also build on top of that. And so, look, I think that it can kind of go either way, but I'm really bullish on Ethereum. I definitely think that this is the network to be building on. I know that for NFT, there's kind of a lot of traction on Flow, but I'm really thinking that Ethereum kind of is the space for this, because when you think about, payments and KYC, these kind of things, which really DeFi is pushing forth, that has direct kind of intrinsic links with how do you build a player-creator economy, or how do you build, a creator economy. So yeah, I think that there's a lot of upside that can come.
Yeah, and there's also if you have NFT market in one shard, then it's an eventual consistency problem. So you just have to kind of make sure that the core team knows what they're doing, and I'm pretty sure they do. I have high confidence in them. But kind of thinking about the core team and their contribution in it, and Paul, you have a Zcash background, I noticed. So you were
ever working for Zcash?
Yeah,
some stuff.
Exactly, but you got a grant from Zcash Foundation, and so your experience with sort of the zero knowledge system infrastructure that Zcash has, and it must have given you some insight as to what system works and what doesn't work, in terms of okay, well, how do we do this properly, and how do we make sure that if you wanted to use it and you wanted to maintain privacy, how do you do that? But even more central to the theme is chains are moving from proof of work to proof of stake, and this is one of the main industrial chain to move, which is ETH2. But the applications, Emma mentioned, can benefit from just either using the infrastructure as is, or developing their own staking mechanism. In what lessons can we learn from that? In what ways do you think that staking model can help DeFi application? And as a follow-up, I haven't forgotten about you, Stephen. Or we're going to talk about, okay, is this even worthwhile doing on ETH? Why are we doing it on ETH? That's the question that I have for you. So first, Paul, and then let's go. Yeah.
Okay, so first, I will have to say that actually, from my perspective, okay, this is a popular opinion that the gas price decreases the speed of the adoption of the DeFi and all the stuff. But I'm not quite sure that it does actually, because if the gas price is really a showstopper, you can use ETC. The gas price is way lower there, and you still have got all the infrastructure. You have the MetaMask, you have the blockchain explorers, and all this stuff. However, what we are really lacking is the amount of the use cases. And what we saw within the DeFi boom that we saw in the end of the summer, there at least appeared some use case that gave profit to the investor, to an average investor, and the mechanic was quite easy. So any person could farm yield in a couple of clicks. So that made the adoption higher. And actually, if we're speaking about staking, it also can lead adoption. Of course, it's not a long-term. That wouldn't be a long-term opportunity for the market, because you need all this interest to be made of something. But staking can bring more people, because it's quite understandable. You simply put something in somewhere and you get the yields. And it still makes sense for the projects because you simply lock liquidity somewhere outside the market and it's not getting sold. So from my perspective, staking is really good for the end customer and for the mass adoption because it's really easy to understand. However, we need more complicated use cases to actually have, let's say, wider adoption of DeFi and particularly NFTs and all this stuff.
Right. So it's a careful balance between, okay, where does the locus of responsibility reside? Should it move to the application or should it remain in the base chain, right? So then, Stephen, this is a question for you. Why should
my third try.
Yeah, why should we continue to use ETH2? That's my question.
Yeah, I'm very glad we opened up the question about the cross-shard, cross-chain composability. I do think that this is going to be the year where there are multiple layer 2 launch and all the mainnet of base protocol launch that have a bridge to Ethereum, whether it works. For sure, Cosmo is launching hopefully in Q2, Polkadot later, Q3, that we're going to see lots of not just composability, but you have asset, maybe you have NFT, you have different tokens in each of these pools. Now you even balance them, right? In traditional finance, it's actually just cash flow management, right? You have user in one region, you have tokens in another platform. How do you balance that? I do think that people understand the question of scalability. Even many technology optimism is going to be a big theme at ETH Denver in just a few weeks. We're going to be hosting workshop and sponsoring there to understand what our even developers are so excited about to launch right now on layer 2. Later on this year, we see the big opportunity playing a liquidity pool, if not arbitrage. That will require two things. One is the technical infrastructure to do all this market making of pools, arbitraging so that they balance out. And the second part, how to use staking in the community to jump on a new platform and new pools. And funny enough, that's where the OTC function is for, even for as tradition for a foreign asset. That will see lots of all these launches in different platforms to be a big thing, right? You guys see Gotchi launch on Matic, that become another staking, another incentivizing event. So Harmony really want to really figure out this cross-chain to Ethereum first, but cross-chain with incentives, with arbitrage to figure out the finance use case. And funny enough, all our NFT partners tell us that NFT is a financial asset, is a derivative, is an incentive for the community. So hopefully we want to learn from you guys how to figure this out with Harmony as well.
Right. You cleverly avoided saying Harmony, and I really applaud you for that. Because it is an interesting project. By the way, a disclaimer to everybody: I don't own any of the project. I don't. So I'm completely neutral to this. So maybe question for Leo and then Alec. So let's think about why do you guys think that the gas price is so high, right? I mean, I think I have my theory, and everybody here has their theory. But why is the gas price so high, especially when the DeFi the craze started? Let's start with Leo, and then Alec, and maybe everybody chime in.
I mean, I think it's pretty simple, and it comes down to like one app. That's Uniswap. I mean, there's like other DeFi, but like if you look at the big picture, most of it is like Uniswap. But in general, DeFi, because the way these systems work is like, you lock up a pool, and so you're effectively, locking in a price at which like you're hoping the asset will hover around, because otherwise you're losing opportunity cost. And what happens is you get an arbitrage opportunity off chain, and that causes a lot of trading. Then of course we hop in because Chainlink has to also bid up the gas price, because we're when there's volatility in the market, we have to publish the price update often. So if you go on ETH gas station, I'm sure you can look up the top gas guzzlers. They have a ranking. But when there's volatility in prices, because there's so many apps that rely on price data, either the data is getting updated or market forces are reacting to that price update, You also have time to time some like occasional peak because of like some coin is ICOing, but those are more like periodical, right? Like over a weekend. But if it's a general trend, it's just because there's price volatility. Overall, I don't think it's going to get better. People think sidechains are going to make things better, but there's also the flip side of like, okay, but what if the sidechain, just attracts more and that just fills more demand, and then since they have they're representing so many transactions, they're going to be bidding up the price. It's a constant auction.
Right.
So I don't know. Yeah, I think it's mostly price volatility right now.
Oh, interesting. Okay, Alec, what do you think?
Yeah, I mean, I think I agree with Leo generally, but more broadly, kind of people just want to use Ethereum, and there's very limited block space. So when you have strong and growing demand for block space and very scarce block space, then fees go up. That's just kind of the dynamic of the fee market. And I think like Ethereum 1 was kind of this, sort of proof of concept of what Ethereum could be one day. And it certainly wasn't like ever meant to be the final form of Ethereum. And we're kind of seeing it being pushed to its theoretical limits right now. So it can do roughly 30 transactions per second, and there is much greater demand for transactions, and especially as you kind of like layer these DeFi protocols on top of one another, the transactions become more and more computationally heavy. So that doesn't help either. It's
like when you try to get an amateur radio license, you have to know about the frequency space. And you realize that amateur radio operators have access to so wide a band, and then the cell phone operators have very narrow band that they operate in. And it feels like when you're talking about layer 2 and kind of like pushing it into tier 2 and off chain, you're now specializing and making a better, more efficient use of it. But at the same time, that also puts a lot of the pressure in the underlying chain. So it's really interesting. And I wanted to kind of like go around the room again, starting with Emma, just kind of ask this question. So now that we talked about the price, we talked about the technical angle, what are some of the concerns that you have for Ethereum moving forward, other than the gas price? Okay, so the gas price is the easy thing to talk about. So let's start with Emma, and then just kind of go to left to right and kind of chime in.
Sure. Maybe not to just answer like specifically Ethereum, but I think broader crypto, I still think the kind of onboarding heuristics for people from the outside, I still think that can be heavily improved, and it's kind of still going to be a big adoption issue. Just knowing like working with, more in the creative side and with creators, when they don't have a background in crypto or even in kind of any more like technical side of how you use different applications, it's really difficult. And I don't think that people as well, when they come in, they understand the concept of like, if you lose your private keys, that's it. They're used to just going to the bank and saying, okay, how do I get access, or I need help? And this was something that we found for us. We did in our first kind of auctions, all the designers that we worked with, only one like knew about crypto and NFTs. And when we kind of reached out to them, we didn't even mention that we were building on Ethereum and that crypto was involved, because it's immediately this like stigmatism, and then everyone focuses on that rather than the other stuff. So we kind of did it that way, and it actually worked really well, because then they had this really good experience without knowing that it was Ethereum. And then later when they kind of figured it out, they're like, oh, wow, it's, not this scammy ecosystem, but it's actually something that can generate value for me. So that was a really good way. But then we did like all the accounting manually and did like, fiat transfers for them. But now we've moved into it being automated, and they have their own wallets. But I'm still like, get a bit scared, because sometimes thinking, well, if they lose their private keys, that's it. There's nothing that we can do. And I think that the emphasis kind of can get lost because I guess the interface and the UI and the kind of information architecture still isn't properly there to assist people with the onboarding side. So that's, I'd say, a concern that is kind of just always been there, and it hasn't been properly addressed.
That's right. It's the payment hardness thing, right? Meaning you send it out, that's it. You're never getting back. And so talking about payment hardness, now designing the wallet from Guarda wallet's perspective, like what's your take on this in terms of like this should make things easier, right? Easier to understand. But I look at some of the reference wallet implementation, and like I have to do what? So chime in on that, please.
Yeah, I would like to say one thing about the previous question about the Ethereum and actually what's holding us except for the gas price. And I would say that the speed of the updates actually holds us because right now we're having a major update which was prepared for a couple of years, as far as I understand, within the Ethereum Foundation. And now we have to wait for, I don't remember right now actually, but it's 2 or 3 years, yeah. And for us, as a service provider, it took quite a lot of time to implement the bridge for our customers to be able to stake in Beacon chain, to transfer funds to the Beacon chain and to stake in the Beacon chain. And actually, we will have to do even more after they launch the network itself. So we will have to handle a lot of operations and of the development that we will actually throw away. So it's not a capital. We are simply spending some effort on something that will be used once by every customer. Right. And then we need to simply throw it away. So from my perspective, the biggest issue with the networks that we have right now is the updates of the protocols. This is what we see in Bitcoin, which is not getting updated for a long time at all. So it gets outdated every day more and more. And this is what we see even in Ethereum, because if guys from Ethereum Foundation even know what they want to do and they know how to do, they simply cannot do it fast enough. So they cannot simply deploy the update like you do within the service.
So this is a part where now it's like gloves off, right? So I saw Leo wanted to jump in. This is perfect. Now we're talking about the role of the core team and how quickly they make things happen. Leo, it seemed like you just wanted to jump in. I'm so sorry, Stephen. We'll jump right back into it, and then we want to hear from you. Leo, go for it.
I was just going to say, when he was saying 2-3 years, it was just like officially the deadline. You know, we don't know.
It could be longer. It could be shorter. Who knows? Depending on how much of Mountain Dew people drink. By the way, it's not sponsored by Mountain Dew. But so, Stephen, what do you think? I mean, so it is, you know, what's the outlook like for Harmony? And like where does it fit in the new, you know, grand scheme of things?
Yeah, I do think that that's where some of the newer chains, if not even Cosmo and Polkadot, will play a major role, right? I do think Ethereum 1.5 is amazing. Optimism is going to be the story of this year. But then some of you already said, right, it's not just about the fees, but the speed of innovations. So I'm not trying to position Harmony will be better than Ethereum. I'm trying to say the world should be about cross-chain. Polkadot, Cosmo, Harmony, and Ethereum and Bitcoin together. So we're going to figure out the whole scalability, I would say even this year. But then the next stage is much, much harder. We want to connect all the banking infrastructure, all the regional economy of the world. We barely can talk to each other of different blockchains, right? The wallet doesn't work. By the way, Argent is really good because you asked about security. But it doesn't work for other chains. I like Argent for Ethereum asset. I couldn't even arbitrage with Harmony asset or like Cosmo and Polkadot coming up. That must be solved, right? We thought that big like blockchain can really innovate all fintech industry, if not the revolution. I do believe the bigger problem that is going to break out this year is solving, you guys touch on the technical part, composability, but the broader problem of all the toolings, all the users of connecting of all these multi-chains.
Right. So I think I just want to chime in here. Hopefully you guys are okay with it. Is to my limited knowledge, you know, there's a lot of work being done by core team that we don't even really get to hear about. And it's just like a lot of it is research and development, right? So like they do a lot of these things, and then they also go through a very lengthy review process. And so some of these don't see the light of the day. Like for example, Plasma, which was supposed to be layer 2 equivalent in Ethereum that's similar to Lightning Network, or Rainbow Network, which was just kind of like there was a paper about it and that was about it. So when you have this like flourishing of either the protocol play or the application play or whatever it is, and a lot of times they just happen, right? That's the beauty of decentralized anything, but you also see a lot of codes that's just not audited. And I'm sorry, I'm just jumping from a topic to topic, but there's a method to my madness here. And so when you have a lot of these unaudited codes, is this a sign of a really robust entrepreneurship and like flourishing of technology, or is this cause for concern? And we're gonna go right to left this time. So let's start with Alec.
Sure. Yeah. So I think that open innovation is overall a force for good overwhelmingly, and unaudited code bases are kind of a necessary evil, for Ethereum to accomplish something greater long term. Personally, I would not use a project with unaudited code base unless I was messing around with the expectation that I might lose it. And certainly I don't think that like Coinbase, for instance, should expose their users to anything that isn't thoroughly audited and, more importantly, battle tested, because even if it's audited, that doesn't necessarily mean that it's safe. But I think that there are some things that are impossible to test without deploying them on mainnet. So the idea that we have to have only audited contracts on mainnet doesn't really work. So rather than label unaudited code bases kind of blanket bad, I think as an industry, we just need to educate new users on what's safe, what isn't safe, and kind of how to distinguish between those two things. And so like in an open ecosystem, I think you're gonna have a lot of crap that's poorly made. Anyone can deploy contracts. But in addition, some of the amazing things that have been built on Ethereum, helping users just wade through that messy frontier, I think will be really, really important.
Leo, what's your take on this unaudited code business?
Well, let's just say I kind of agree with Alex's like the spirit of what he's saying, but maybe not enough emphasis. Initially Emma mentioned that like some of our users felt that like blockchain space was like kind of a scammy ecosystem. That's because it is. Like people are creating fake ERC20s on Uniswap so that you think you're buying a token, but you're actually buying another token. So I would be much more aggressive in educating people and saying, most of this stuff is crap. Do not touch audited code. If you're a regular user, do not touch audited code. I will repeat this. Even ETH 2.0 is not audited enough for a regular user, in my opinion. Like the interest rate is not worth the risk. I'm gonna get blasted for this, but like I think if you look at the just regular market, people are getting like stimulus checks. And you see the same pattern happening in the regular stock market, for example, with like people speculating on Robinhood, GameStop at like over $100, like with the short squeeze. So like I do think people see that it is a symptom of like kind of an internet bubble. So I am it's a good sign, because we wouldn't have all of this innovation if it weren't for we wouldn't have audited code if there was also audited code on that existed on the side. And I think it's a good sign, but like as a regular user, I would strongly recommend against testing these things out, especially if you don't have the technical expertise. And just because we've seen people lose millions of dollars, coins going up and down.
Yeah.
And so that's my take, because I guess maybe I'm a bit more risk averse, especially when I don't know what I'm using.
There's a different takes to this, and yeah, for sure. I mean, if I'm betting $100 million, I probably don't want to use it on how to go. But maybe Stephen can kind of inform us from his you got background from Apple and more kind of well-established tech companies that when they do these sort of things, I mean, obviously not blockchain stuff, but when they launch new products, they do rigorous testing and things of that nature. What is your experience with this ecosystem, and how does that jive with your kind of the old tech world?
Yeah, I'm glad that you used this question about audit and security as a way for everyone to disagree with each other. Because I wanted to say a controversial, if not contrarian view as well. I actually think that auditing is actually bad for some project. Again, I didn't say auditing is bad. I'm just saying auditing is bad for the user perception. Some project to say that this is good enough. I'm not against testing in production, but there are some really bad auditing. If you look through some like names that you say, I'm audited now. Okay, here are the 3 changes, right? Your name should be updated again. It's terrible. It gives the wrong impression on what kind of trust and reliability and security we're looking at. Again, we are all doing software, like we're doing website design and pushing a website that crash and just slow, Twitter just go under the well, right? This is bad for financial software because it got hacks, right? It got fund lost. So my actually research background has been in security protocols. That formalization of semantics and formally proving something is correct is actually the minimal bar when you want to launch a rocket ship, or if not just send off a self-driving car or a airplane software. I know we're not there yet, but I do feel like that actually the Ethereum deposit contract was audited, Uniswap is actually formalized, but not all the way yet. The funny thing is my personal pet project has been writing compilers and semantics and all that can really chime in here because many of the smart contract really is about to be able to get to that level. And I very much look forward to, not that you have to trust the developer, you shouldn't even trust the auditor because like you're just looking for a brand name. That I do believe even this year you can actually trust that the code itself is being so articulated to the compilers, whether Rust or actually COD to be formal semantics, all the way to proving that some properties, whether no one can withdraw from this account or even economics attack is possible.
Okay, so there's a fine balance between reduced set instruction, which is not fully Turing complete, which makes it easy to do formal verification. I'm not going to dig too deep in it. I know everybody here knows what we're talking about. The panelists are all smiling, so they know exactly what we're talking about. But it's always interesting when we talk about the fine balance between, okay, do we limit the language and what it can do versus do we try to tackle cases and do aggressive fudging, or is there even a way out of it by just math, right? So it's really fascinating, and we'll come back to that. But what's your take on this, Paul? Like you had chance to like kind of when you file for grants for Zcash, and Zcash is a fantastic example of that, right? So I think NCC did a really great audit of Zcash, but ultimately it really relies on reputation of the firm and I haven't read through all of it. I mean I read through some of it, but not all of it. So I can't really tell you that all of it worked, or even maybe I missed something because I'm just not well educated enough to understand it. Unlike the panelists here. So what's your take on this angle? That the unaudited code, is it a security filter or is it something else?
I've got a background in card business. I mean, like Visa, MasterCard, and they have dozens of audits every time you launch a product, and they audit it from the marketing perspective, they audit from the technical perspective, from the security perspective, and from the banking legislation perspective. So they do all of this. And still they have the money laundering issues, still they have the security issues, and still they have misleading issues, from the regulatory perspective. So I believe this is, of course, a little bit of a security theater. However, they serve, 2 billion of people around the world, and still the amount of fraud and the amount of problems is considerably low. So still it makes sense. However, right now, the maturity of our industry is really, really low, and the sum of technologies is also low. So, for me, I believe that this is better that we update faster and we grow faster. then we carry so much about the security and about the standards like people from the banking industry do. And there will be, at some point, we will reach, the crypto industry will reach the same level of caring about the security as the banking industry right now has. But before that, we need to update and to make things faster. And when we understand that we have already done a lot of stuff and we have a lot of customers, so now we need to think about the security. And anyway, the market will find its balance at that point. Maybe there will be some brands like MasterCards, which will be stamped on the website, and you will understand that, yeah, I can use this service.
Well, I sure hope that the MasterCard isn't going to be the brand that we all have to use. That goes kind of against the decentralization. But I think I totally understand what you're saying. And yeah, you know, even if you just look at the browser and you look at the top address bar, there's like a little lock button, and people look for that because that explains to them, yeah, it's a TLS, you know, and there's SSL cert there, and that encrypts the communication, right?
I'm very sorry, but I would say that MasterCard and Visa are quite decentralized, actually.
You know, actually, so there's a really good book for our audience here, book by D. Hawk, and it's called Harmony.One, I believe, and it's a book subtitle is something called The Rise of the Chaotic Organization. And it talks about how, you know, he needed to get all of the stakeholders into creating a reverse holding company. It's quite interesting stuff, and I think that's sort of where you're alluding to. And maybe we'll have a broader industry standard as to, okay, well, if we wanted to make it into a Lego block, then you know what? At least Duplo fits with Lego, but none of the DeFi blocks fit with each other. So interchange the standards; those would be really interesting. Now, Emma, like, so as an application developer for using NFT, and it's just kind of like, none of this is worth anything if it doesn't touch commerce, right? Like, what's the point of doing all of this DeFi stuff if we're not benefiting people at the end of it? We're making their lives easier, more comfortable, or even more pleasant, right? So, in your customer-facing world, which is super important, meaning like that's the reason why we do it in the first place, other than the interest in the tech. What's your take on the unaudited code? I mean, it's application development, so it's probably okay, right? It's but maybe not, right?
Yeah. So we had smart contracts for our platform, which is very much like interacting with payments themselves. If you think about like auctions in a marketplace, we were kind of doing escrows and these kind of things and taking bids and holding them. So yeah, we got all of our code audited. But I would say it's, saying that code is audited, it's kind of like the spectrum thing as well, because there's different levels of auditing. And we had some really good auditors that were like very thorough, and they were doing test cases and testing on, the functionality side and then also the technical side, which was really good. And then we had other audits, which was like nightmares, and it was kind of like they didn't give anything. And there was almost like no point of them doing it. So I definitely think that whenever kind of payments is being touched, it's really important because it is that thing you can't reverse. And only when you experience the kind of heartache of not being able to access your funds, but seeing them there, that you then realize, okay, it's really important that you need audited code because you can't go back. And before then, I think a lot of people take it for granted and they kind of think, oh, it doesn't really matter, or I'll deal with it when it comes. But then when that does happen, or you even like get a scare that it's there, it's a really big thing. So I definitely think that, even if it's not like, some crazy kind of like flash loan thing or something like this where there's an interaction, whenever it is interacting, and particularly because it is consumer facing, like how do you explain to your consumer, oh, sorry, your money's actually sitting there, but we just can't do anything about it. It's not the best kind of customer service. Right.
So like it kind of comes all into one big package here. So, audit, it looks like the panelists you guys have a very nuanced perspective. So like things like Leo was mentioning, you want safety. Feel free to jump in.
No, yeah, I kind of, after listening to you all, I kind of agree. There is this like kind of security theater around audits, especially recently, where like you see more and more of these audit firms popping up every now and then. When I say audit, I just think in general of having like a conservative outlook when you look at your contract, and this could not necessarily mean hiring a third party, but also just making sure like your test suite is like covering, most of your possible cases. Because, if you look at developers, a lot of developers have kind of this mindset that is similar to, Paul, in the sense that they think, I can just upgrade it all the time. Like if you, you're talking about the protocol, but you understand, like a lot of software developers, if you've worked on any other type of code base, you can always upgrade if there's a bug, but on Ethereum you can't. So just having that mindset is also very important. So, and also, like I said, there's so many auditors now. Maybe we should have an auditor of auditors who's like looking at, maybe tracking, okay, all these protocols that got hacked, they were audited by this auditor. So minus points for you because you screwed up. I don't know, but I agree. We don't necessarily need a badge of approval. I'm just saying, if you're putting money in something that you're not certain about, maybe be careful with it. Right.
Let's go to Paul real quick, and then whoever wants to talk, jump in.
Actually, Leo, what you've described is how MasterCard works. So they simply allow different auditors to audit and to put the stamp. And the second thing is that what they do not audit the code, so it's pointless. They audit the processes, and until we have any entity that will be able to audit the processes of the development and of the deployment, that won't work, because otherwise it takes too much time to audit every time the code itself.
Yeah, there's a user experience whenever you deal with payments, and it needs to be fast, and you're deploying new system, and you have to make sure that the previous system works when you replay the same thing. So it's very difficult to put that together. So it's really fascinating. I want to give last 12 minutes, and Alec, you've been awfully silent about all this, and as an investor, this is like you care about this, right? Like actually it matters a whole lot to you, because your decision-making process relies on experts, and also knowing the system as well. So what is your take on this? You're muted, unfortunately.
Sorry about that. Yeah, I mean, I think that it's definitely important. It's a kind of stamp of just, it adds a stamp of confidence. It's a little bit false confidence, as some people have alluded to. I think the biggest test as an investor is how long has the system been running live on mainnet with real money on the smart contracts. That is your kind of perpetual bug bounty. So if there's $100 million in a DeFi contract for 1 year and nobody hacks it, you can probably feel a little bit better than that. Even if you have something that doesn't have that track record, but has, I don't know, 10 audits from great auditors, I'm much more comfortable with the thing that's been running on mainnet for a long time. So I think that audits are helpful. They're a good signal, but really at the end of the day, you can't say, hey, look, I have an audit, so this is secure. You need to prove that and have it be battle tested in the wild. And so that's kind of how I think about it.
Got it. But then there is a sort of like a scaling effect, right? So when you start battle testing at a small scale, the incentive just isn't there. What's your take on that from that angle? It's just not as visible when it's small scale project.
Yeah, I mean, it's a good point. You don't really know until you get to scale, right? So certainly, whatever you can do in the early days to give users confidence in your code, you should do. And I mean, another thing that I think projects can do to kind of just help out on the user front is enable insurance, enable options for risk management. And so we, identified insurance a couple of years ago as this kind of critical pillar of DeFi that was needed to help with adoption longer term. And so we backed Nexus Mutual, which today provides insurance for pretty much every kind of major DeFi protocol. So that's another kind of avenue of protection that users are offered. And I think what applications can do on the front end is integrate insurance at the point of sale, advertise it to your users, and let them know, hey, this is a risky product. This is maybe should be considered in beta. I like what Yearn does on that front with just kind of labeling it in beta. And I think what you're going to see over the next year or two is more risk management solutions kind of be brought to the front of application front ends. And at a certain point, users are just going to demand applications take safety kind of like front and center.
Right. It's just a more educated user base. They're going to demand it. And then I think this is really organic, and that's a really good point. So let's take maybe 3 questions from the audience. So please type into the chat. I should be able to see it. If I don't see it, I miss it. My apologies. Then we're going to ask the panelists what they're most excited about. That's not their project. So let's start with the questionnaires. Let me see. Question is not coming in. If there's no questions, then we're just gonna jump right in. Please DM me the question. So the way you DM it is you click on the little people icon on the bottom left, and then you click on Jay Yang, and then there's a little message window. Then you can type in a message there, and I should be able to relay the question to the panelists here. We have a few minutes, and I just want to be very mindful of panelists' time. They've been very patiently sitting down, and they just want to get back to building their tech. And so let's see if there's an open question from anyone. Let's see. No questions? Come on. All right. The way you DM it, just to kind of show you, on the bottom left corner of your window, you'll see little 2-person icon. Click that, and then look for my name, Jay Yang, Jayeng. And then you can click on, there's a little message window, and then you can just message me directly. And if there's no questions, then we'll just jump right in. So this is first for us, where we're holding this event on virtual event. So I thank everybody for their patience. And it's like, it's a new experience for everybody. We chose this venue because we really didn't want to do, oh, there was a question. Okay. How does everyone feel about the sustainability of yield farming? Oh man, that's a tough question. What are your thoughts on governance tokens? Let's start with the yield farming thing, because it's like a hot topic and everybody wants to talk about it. So I'm just gonna mix it up, and I'm gonna go with Alec first, because yield farming, you mentioned earlier, Yearn, sorry.
Sure. So 200% annualized yields are not sustainable, I think, and can't be expected to be. So I guess like one question that I think about is like long term, will yields converge to yields in the traditional financial system? And I think that there are good arguments for why that might be the case, but I think that crypto will always have slightly better yields than the traditional financial system at steady state. And that's because these protocols just run with lower operational overhead. A lot of the administrative functions that banks and financial institutions have to do are costly. And in Ethereum, in a distributed system, a lot of those costs are pushed elsewhere and are pushed onto just other parties. And so I think that there are certain efficiencies that you gain by running a system decent content, and for that reason, you should be able to, have long-term better yields. I also think if you just think about like a bank as like a closed source kind of proprietary financial operating system, and then you think about DeFi as the kind of open source operating system for finance, which is going to yield more exciting opportunities to deploy capital. And so for me, I think like very clearly the open network approach to that is going to have much more interesting results. And those results ultimately are what drive the yields here. So I think it's going to be DeFi and the open networks kind of pulling yield up, and that's probably what is going to drive a lot of capital from the traditional financial system into DeFi. And you kind of see that with stable coins. Like the rise of stable coins over the last year has been in large part due to yield farming. And so that's assets that used to exist in a different form factor in the traditional system moving over on open networks because there just are better opportunities here as a result of a lot of the innovation that's going on.
Right. Exactly. No office space to rent, right? And then no one has to go drive and commute. Let's jump to Stephen real quick, and then go to Emma, and then back and forth.
I agree that the invincible summer of yield farming won't last, won't sustain. As a system, it's true that it would stabilize if not go down. But I think the interesting point is whether per project or on a transient basis, whether there will be some spike in some project use. We all agree that lending shouldn't go up to like 200% forever. But then the whole reason of yield farming really start as incentivizing bootstrapping a certain project. So as a whole, as a system, all the stablecoins arbitrage, if they are a global optimizer for lending, it should really stabilize, maybe around 8%, 10%. That sounds reasonable. But per project, that's where the interesting part is, right? The reason for use is not just about general lending. It's also for bootstrapping certain project incentivized. So the way we see it is many of the use will open up different way of marketing, different way of bootstrapping of ecosystem. So that's one part. But I think the exciting part is identify what Alex said. Can there be a sustainable competitive advantage, both as an industry, but also for certain segment? As an industry, we all believe in decentralized open finance to have like multiple decades to win, right? But then per project or per segment, that's the interesting part. I do think that even as simple as US dollars, there will be a long-term arbitrage between like at least 10 different coins on different chains, bootstrapping different new product launch, new segment of NFT, and then the next wave of like regional stablecoins. Knowing those are the like arbitrage opportunity, and then Uniswap actually providing a utility that no other tools can provide, give us confidence that use would always be there, especially when bootstrapping.
Right. So I mean, going to the yield farming and NFT, like how does that impact one another? Is there a way to incorporate the two? Is creating new digital assets helpful? Is there a synergy here, or there is not a synergy? Emma, what do you think?
Is it also for me? I have a lot to say. So is it Emma?
No, we'll go back and forth. I mean, it's up to you guys.
No, please do. We launched a few NFT derivative structured product too. So love to follow up with Emma some other time.
Let's do that.
Yeah, no, I think that there's a lot of crossovers. I don't think all of them are being explored. One thing I would say, though, I think that sometimes it can have a negative heuristic, particularly when you're transferring into the NFT space. The kind of market dynamics of NFTs is different. It's not like DeFi. It's not like, kind of traditional crypto space. And so I think that expectations in the traditional crypto space people can have about kind of yield and an expectation on these things. And when they come into NFTs, they should be looking at it through a different lens. But it's very hard to, and, a lot of the crypto market, it's all around speculation. It's all around, community expectations. So I think that kind of is one negative fact that people really are just doing it a lot of the time, to quickly flip a coin or to quickly kind of see an opportunity. And then as soon as the APY is in it, like 10,000% or something crazy, then the project's a scam, or, they exit and these kind of things. So I think that heuristic isn't sustainable, and it's not really like touching on the core, I think, of what DeFi is really about fundamentally, and particularly NFTs. So yeah, that's kind of what I have to say there, which I've seen like some of that negative transfer definitely coming into the NFT market.
That's fantastic. So we're gonna finish up the round with let's start with Paul and then Leo, and then we're gonna ask everybody 30 second what they're most excited in doing. I'm so sorry, I planned this poorly. We're exactly at 8 p.m. Your time is super valuable, so let's go with Paul and then Leo. I'm sorry, guys. Next time you're back, you're gonna get the first words.
Okay, I will do it fast. This is funny, but I don't agree. I do not agree with both statements that actually Alex
That's
did.
good.
So firstly, this is the first time in human history we see a fully unregulated capital market. That's why we do not understand whether these yields are sustainable or not. And from my perspective, they are more sustainable than actually we think. Maybe financial market is more tempted to be bubbling all the time. So maybe this will be always bursting and bubbling and bubbling. The second thing is about the yield size. So when we have less intermediaries, as I get an economist bachelor degree, so I would say that the less intermediaries you have, the more perfect the market is, and that means the less profit everybody makes. So that tells us that we will have lower yields than on the classical financial market as soon as the risks. Firstly, the security risks decrease. So that's it.
Okay, this is a very nuanced position too. So them are fighting words. So Leo, you want to chime in and then let's wrap it up?
Yeah, I mean, I think there's two types of yields. First of all, because like there was like the original like compound rate of return that you would get, and now we have like the actual yield farming. And I think the reason is, yield farming is kind of the new ICO because people realized, okay, ICO has a bad brand name. A lot of people got burnt. And so effectively what we're having is just a form of ICO because a lot of these farming schemes are based on a printing mechanism, right? Where like the token gets minted and you're minting a governance token. So, to draw a parallel within that and like, yields by like that a bond would return is like kind of not applicable, and that's why I think it was mostly, if you look at the trend, okay, a lot of these bursts, a couple are doing well, and I think it was the same thing with ICO. So I think in general it's a good tool. We have an open financial market, and I think we're going to see great use cases. But as always with innovation, people things overheat.
Oh man, we're gonna have to bring everybody here back for a yield farming discussion, and at that time we'll give plenty of time just on yield farming. That would be fantastic discussion, wouldn't it be? Alec, I'm going to give you just a 30-second last word, and then we'll go over what everybody's working on.
Sure. Yeah. I mean, so I think that just to kind of respond, I guess where Paul and I disagree. It's one thing to support the yield that we have today when you have about $25 billion chasing that capital, and it's another thing to support that yield when you have 10 or 100 trillion dollars chasing that yield. So I think invariably, like if you can borrow capital very cheaply outside of the system and then go and chase yield inside of the system, they're going to have to converge, or at least close to converge over the long term. So that's kind of my rationale for why these really high yields aren't sustainable in the long term. While it's difficult to onboard, while there's a lot of friction on the on and off ramps, that doesn't, that isn't necessarily true. But as it becomes easier to move back and forth, certainly yields are going to converge.
Okay, this has been wonderful panel. They know so much more about everything than I do. I just learned so much today, and I just want to thank the panelists for their time. And before we go, we're gonna do 30 seconds for each panelist, and they're gonna talk about the projects that they're excited about. That's not their own. So we're gonna go from center and radiate it out because we want to give more time to people who are in the middle of this. So let's start with Paul, because I missed you, and then Leo, and then we're gonna go the reverse order. Paul, what are you interested? What are you excited about?
I'm excited about NFTs created as a form of digital goods within games. So this is what I watch, and I don't see any sound startups.
That's awesome.
Interesting. Why not?
Okay, let's go for Leo.
I'm very excited about OpenGSN, which is an open gas station network, which is a relaying service on Ethereum. Because we mentioned like the problem of gas prices, but I don't think that's the only thing that's blocking user onboarding. Even with these side chains, you might get transactions which cost a couple cents. And OpenGSN fixes this because developers can pay for relay transactions, and that works on any EVM chain basically. And so I think it's interesting to get more adoption.
That's my personal favorite too. So
MetaMask barely crossed 2 million, so we need to get higher than that.
Yep. Steven, what's your favorite project that's not your own?
Optimism. Isn't it amazing that we changed Ethereum 2 to Ethereum 1.5 just because of a few great layer 2 projects launching this year? Most of all, it's really mainnet DeFi project is already on it. That we will really see whether the whole story about that DeFi is not just for the whales that we can only pay $100 gas fee, but can actually force us to think what else is possible in Ethereum. For 2021, Optimism and Harmony, isn't it great for the year?
That's great. All right. Okay, Emma, what are you excited about that is not your own project?
Sure. Actually, I really like Synthetics, like kind of an OG DeFi protocol. I mean, Kane's Australian and I'm Australian, so I kind of have that like tie there. But I've been in crypto finance as part of a hedge fund for a number of years. So yeah, I really like what they're doing. I think that they have kind of a lot of scalability in their mindset and business concepts. So yeah, I would say that I'm excited for them to keep growing.
That was in the back of my mind. All right, Alec, what are you excited about?
Yeah, I'm really excited about DAOs. I think broadly as an organizational structure, this is like a super powerful way to coordinate economic activity online. And you can kind of think of it in this kind of analogy to the LLC, the limited liability company, which enabled a lot of risk taking and ventures that led to huge industries. And so I think DAOs are a similar kind of watershed moment. And what's going on in these kind of emergent communities around DAOs is just incredibly exciting, I think, and encouraging.
That is fantastic. Leo, I interrupted you real quick, and then let's give everybody a round of virtual applause.
Collateral ratio, because otherwise it's unusable.
Yep.
If it's 50% collateral, like I don't know how people use it.
Well,
that's my understanding of the protocol. Is they're planning on reducing it, and that'll be great.
One day we'll get there where the collateral requirements are minimal. But thank you, everyone. Thank you, panelists, for spending your time, kind of giving us insights on where we're going with this. I hope I didn't jump around too much on the different topics. I think we covered very broad topic-wise. At some point we'll do a much narrower one. So thank you again for your time. I just can't thank you enough for making 1 hour available of your busy schedule. Audience, thank you very much for sticking around, and there will be a networking event after this. So please feel free to mingle. This is what it's all about. We gotta build this community. So thank you again.
Thank you, Jay. Thank you for hosting us. Really appreciate it.